the Q3FY20 earnings conference call of PI Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on PI Industries Q3 and 9 months FY20 earnings conference call. Joining us today are senior members of the management team, including Dr. Raman Ramchandran, Managing Director and CEO, Mr. Mayank Singhal, Executive Vice Chairman and Managing Director, Mr. Rajneesh Sarna, Executive Director, and Mr. Subhash Anand, Chief Financial Officer. We will begin the call with key thoughts from Mr. Singhal. Thereafter, we will have Mr. Subhash sharing his views on the financial performance of the company. After the opening remarks from the management, the forum will be open for question and answer session. A cautionary note: certain statements made on the conference call today may be forward-looking in nature, and a disclaimer to this effect has been included in the press release shared with you earlier. I would now like to request Mr. Singhal to share his perspectives with you. Thank you, and over to you, sir.
Yes, thank you, Nishit. So thank you once again for joining us on the call today. It again gives me great pleasure to be addressing an audience that has been with us through a growth journey. As you're well aware that in this quarter we've had an unfortunate accident in our MPP in Jambusar, which resulted in fatalities. I would like to start by paying our sincere condolences to the families of the affected employees. The present update is that we are working dedicatedly towards reoperationalizing this unit, and our efforts will be to resume normalization functioning expeditiously post all regulatory approvals. Now, I'd like to share some of my quick highlights for Q3. We have reported 20% growth in a blended revenue. Our profit after tax has improved by 12%. We've delivered 20% year-on-year growth across the businesses, combined with the PAT showed a 21% increase year-on-year. Following the abundant late kharif and rabi conditions are optimal in the light of the performance of the agri-input industry has been moderate, especially given the first half. PI have mitigated these trends to a certain extent, and we have continued to deliver on expectations. Our wheat herbicide of Kira, launched during this rabi, has shown a positive outcome in line with our expectations. We are focused on introducing an advanced lineup of innovative products that will complement our existing sales. Several high-potential products are already in the pipeline, and we intend to develop new brands. Our distribution and crop reach stands to be strengthening post the integration of Isagro. Our export business is scaling well in commercialized molecules, and further new molecules are getting added. Backed by our strong order book position, PI continues to invest in new assets, and we plan to commence one of the multi-product plants last quarter for this fiscal, and this would be followed by another multi-product plant in the coming year. Additionally, I am pleased to underline that the entire transaction regarding Isagro has been completed within the fiscal year as planned. Whereas the benefits of the domestic operation will be apparent more immediately, we envisage the export business to progressively scale up with full-scale utilization in the coming later part of the quarters. We are repurposing to acquire Isagro plants to meet the requirements of our innovative customers, further augmenting volumes, and expect to fully leverage this in the next year, 21. We are poised to extend our leading presence at CSM to other verticals. Our global R&D facility and its initiatives with multiple teams of scientists engaged in discovery to stabilization and perfecting novel advanced chemical processes that will give the PI the grounding with new segments for growth. In order to support our strategic growth initiatives, PI Board of Directors have yesterday passed an enabling resolution to authorize the company to raise an additional fund of rupees 20 billion. This will give us the financial flexibility to comprehensively develop new capabilities, augment the already robust growth agendas, with the current operations continuing to cash generations, this resolution will support our initiative to prudently invest in existing and future growth-driven, de-risk current operations, diversify into niche, high-tech segments to sustain current growth momentum. Our performance outlook for 20 is maintained, and we expect to benefit from the sustained good performance of our branded lines of domestic and constantly delivering exports. By the time we report to our annual performance, we will be in a position to talk about the kharif scenario, and this potential benefit to the industry will drive. That brings me to the end of my remarks, and now I would hand over to our CFO, Subhash Anand, to carry forward this discussion. Subhash, over to you. Thank you.
Thanks, Mayank, and good afternoon, everyone. I will take you through the financial highlights for the quarter and 9 months ended 31st December. In the quarter under review, we demonstrated healthy revenue growth of 20% to 850 crore as compared to 708 crore in Q3 of FY19, supported by 24% gain in domestic operations and 19% improvement in export. Domestic and export revenue during the quarter stood at 206 crore and 644 crore respectively. EBITDA in Q3 stood at 186 crore over 149 crore in Q3 of last year, representing a growth of 25% with steady margin of 22%. Profit after tax came in at 120 crore, a growth of 12% YOY basis. For 9 months FY20, our revenue growth was at 23% to 2,511 crore, while EBITDA expanded by 32% to rupees 529 crore. EBITDA margin was at 21%, in line with our stated guidance. Profit after tax stood at 344 crore, higher by 21% YOY basis. Effective tax rate was at 27% due to change in SEZ contributions to the overall business mix. Healthy underlying trend in our performance resulted in robust operating cash generation and enhanced balance sheet. During the year, company has deployed surplus cash in acquisition of Agro Asia and capacity expansion at Jambusar. Total debt net of cash on consolidated basis as of 31st December stood at 252 crore. The road ahead appears encouraging, and we are confident of maintaining the growth momentum with 20% annual growth for next couple of years. That concludes my initial remarks. I will now request the moderator to open the forum for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, in order to ask a question, you may please press star and 1. The first question is on the line of Aditya Jawar from Investec. Please go ahead.
Yeah, thanks for the opportunity and congrats on great set of numbers. My first question is on the QIP. If you can throw some light on what are the new target industries that we are targeting, and any new chemistry clusters we plan to add, or is there a ramp up of existing molecule as well as some backward integration? So if you can throw a little bit more color on the proposed QIP.
Yeah, so this would be the objective of this QIP is mainly into 3 areas that we are evaluating. One is, of course, our current organic business growth and opportunities there to further expansion and scale up. The second area is scale up of newer and niche technologies that we have been working for last couple of years. And the third area would be, diversifying into adjacent verticals, which could be, CDMOs or CSMs in, adjacent verticals like pharma or other specialty chemicals or other applications areas, high-tech applications areas like nutraceuticals and, imaging chemicals and all.
Okay. So, Sarnaji, do we have some line of sight of any of the businesses in the new vertical, or is it preparation we are doing for bidding new business in these verticals?
Yeah, so we are currently evaluating certain options, but as of today, we have not yet finalized or, clearly identified that this is the target or the area that we are kind of finalizing.
And what would be the timeline of QIP and execution of this capex?
So QIP, we are targeting any time in next 1.5 months.
Okay. And this, capex of about 2,000 crore, over what period it will be executed?
So it's not certain as of today that capex would be 2,000 crore or what, but yeah, we have taken an enabling resolution, and as I said earlier, that we will be evaluating several options in these three areas, and then we will be deciding.
Yeah, in fact, Aditya, our intent is to build a war chest. There are opportunities available, so we will evaluate, and whenever we find a right opportunity, that time deployment of this cash will happen. But yes, we are making ourselves ready. So whenever opportunity comes, we should be able to tap that.
Okay, that's quite helpful. Secondly, on the raw material side, considering the current situation in China, do you see some kind of production disruption in Q4? And what percentage of our direct and indirect material is sourced from China? And any current interaction with suppliers on the ground, are you sensing a situation easing? If you can throw some light on this.
So if you were to look at the Q4, we're well covered as far as for the Q4. So we don't see any challenges coming from that. Looking at the further Q4, the company is putting strategy and resources. And as you know from the past, the company has strategically over the last years looking at the challenges that were being posed from the Chinese geography, de-risking its supply chain. So we don't see any strategic challenges for the company as we have the ability and the opportunity to work around that.
Okay, my final question is on gross margin. So your commentary indicated there was some, softness in raw material prices, but the gross margin was, flat on a YOY basis, and the business mix is also kind of flattish on a YOY basis. So were there certain factors which negated the impact of raw material, price benefit?
So as you know that, we don't have a model of a benefit of raw material. We have as we've said in the past, most of our business is done on a basis of pass-throughs. Therefore, we reduce that risk. So hence, this doesn't really directly reflect into the numbers the way you expect the markets of raw materials to perform.
Okay, that's quite helpful. Thanks a lot. All the best.
Thank you. The next question is on the line of Saurav Jain from HSBC. Please go ahead.
Yeah, congrats for a good set of numbers again. Delving more onto the QIP side, I know that it's still work in progress, but do you have something in mind out of this 2,000 crore? How much of allocation you believe or see going towards your own organic growth or scale up of the technology that you're developing, and how much would be probably allocated towards adding up new verticals through acquisitions or other measures?
Not really. We have not, reached to a point as of today to clearly allocate that how much of this is going into other verticals and how much in the existing organic area. And these are the things that we are currently evaluating.
As you would appreciate that, we have taken this call for an equity dilution with maturity of understanding which way we want to go ahead. Clearly, some of these plans will depend on certain the evaluation, the outcomes that we are working and obviously on the basis of the opportunity and speed at which the markets would be able to digest, and we would go out and invest and take those calls at that opportune moment. But as I can say, at a limited level, there are enough things in the pot which are boiling, and now we need to see how we best filter it out.
Yeah, because why I'm asking is that, one thing is that the board has passed the resolution and you have your reserves in place, but you're also mentioning that you are definitely going to raise this money of 2,000 odd crore over the next 1.5 months. So I thought you must be having something already in mind or broader plans.
I was to say that many things are boiling, and the pot is not something that we would like to publicly put out till we are very certain which way we've gone.
Sure, no problem.
And I clarified earlier that this 2,000 crore up to 2,000 crore is a enabling provision. It's not that we have decided on this amount or this size as of today.
Okay, great, fair point. And secondly, well, you're well covered for a Q4 point of view, but what is your sense on how the raw materials that you source from China, how the pricing is already behaving in that country? And probably if there is a backlog of, say, a couple of months of more shutdown, then can that impact your supplies for, say, Q1 or forthcoming quarters?
So, raw material supplies from China is not a very significant portion of our total raw material. It is actually single digit.
Yeah, our revenue dependence on China is in single digit.
In single digit. Now, over last several years, we have been able to build alternative suppliers even for the raw materials that we are sourcing from China. So, as explained earlier, we are right now fully covered till April, May for most of these raw materials. But at the same time, we are keeping a close watch. And yes, of course, if this problem continues for several months, then there could be some challenge. But we are, well aware of these implications, and we are also regularly working on these alternatives as well.
Okay, so and this is sourcing is mainly for your CSM business, right? Not what you're selling in the domestic.
Mostly for CSM business.
Okay, great. I'll join back the queue. Thank you.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
A very good afternoon and thanks for your time. So if you could just update us on the new plants that are likely to start up, which was supposed to start last quarter. And 2 or 3 plants that if you could just give guidance on that.
So one new multi-product plant is starting in this quarter, most probably in this month. And one more multi-product plant is expected to get commissioned sometime in quarter one, end of quarter one next financial year.
Got it, sir. And for the FY21, 2 plants were supposed to be slated to be starting, right? For next year, 3rd quarter and 4th quarter.
No, in fact, the way we communicated earlier also, there will be one more plant which will be commissioning next year. But timing-wise, it could be Q3 or Q4, but we do expect one more plant coming up next year.
So we have the one coming up this 4th quarter, second coming up in quarter 2 of next year, and one more may come into quarter 4 of last year or the next quarter after. That's the plan for now, to be clear.
Got it, sir. And just wanted to understand, typically your 3rd and 4th quarter revenues, you're a second half heavy, your revenues are, and wanted to understand what are your customers, especially in the agrochemical side in US, Europe, telling, is there any delay that we are seeing or the schedules or on track, or just wanted to get some sense on the agrochemical market in those places.
No, we are not seeing any change in this pattern. This is like this. Depending on the geographies these products are going, the demand pattern is like this. That the second half is a little heavy than the first half. But we are not, getting any feedback of any change in the demand or delays in the demand as of today.
Got it. And just want the capex numbers for this year and FY21, the organic.
Yeah, we have spent till December 550 crore.
For full year, how much will we be doing, sir?
Will be our full year capex will be around 600 crore.
This is including Isagro or?
No, this is without Isagro.
And for next year, if you could just give an indicator number.
Okay, we are actually this point of time working on next year numbers, but our estimate this point of time will be around 300 crore, 250 to 300 crore.
Thanks a lot, sir. I'll come back in the queue.
Yeah.
Thank you. The next question is from the line of Ashish Ubgarlawar from InvestQ Invest Advisors. Please go ahead.
Yeah, sir, just one question on the fundraise that you talked about. Our debt position is pretty much under control. So apart from whatever you might raise from the QIP, would you be taking up your debt equity to a higher level? Because then the capital needed will be higher, basically. I mean, put together equity and debt.
Not really, but a lot will also depend on the final, targets that we decide and evaluation of them. But as of today, we have no such, objective or idea of raising the debt.
Okay. But sir, I mean, just from common sense perspective, why would one raise equity when you can raise a lot of debt considering the current debt equity position? I mean, just trying to understand your thought process behind that.
Well, good question. The idea is that, as I explained earlier, that we will be, diversifying. We'll be also investing in scaling up of niche and new technologies. And we believe internally that it is better to invest through equity route in these new models. And then, of course, at an appropriate time, we can also take a call on debt as well.
Okay. So just one more thing on the demand side, how is the traction? I mean, the other earlier participant also asked you on the demand, but are you seeing increased traction on the inquiries or orders, or is it similar to what you have been witnessing for the last 1 year? Or
No, there is certainly increase in demand of existing products, as well as there is a flow of new inquiries, significant increase in new inquiries. So the pipeline in our R&D is only increasing. Number of new projects that we are evaluating in our R&D pipeline are constantly increasing.
So would you attribute that to whatever is happening in China, and is that one of the reasons why you would be having much more inquiries coming in, maybe? Or
yeah, this is certainly one of the reasons. Yes.
Not the only reason, yes, but one of this reason definitely China contributes in that.
Okay, thank you so much.
Thank you. The next question is from the line of Ritesh Gupta from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for taking my question, sir. So just on the new chemistry thing that you talked about, so you are going to put up capacities which are dedicated there, or is it that you probably may look at building a catalog of products also there? Is it the intention, or is it? I'm just asking that because you mentioned it separately. Ideally, it's the same business under the CSM umbrella that you have. So you mentioned both of them separately, that organic capex and then the investments in the chemistry side. So just wanted to check, are you also looking at catalog products and some new chemistries?
Yeah, so the only difference is that, in our CSM area, we work on technologies shared by our customers. Okay. More of a custom manufacturing business.
Correct.
And when we say that we'll be scaling up our own technologies and all, then these are the technologies that we have been working. These are the technologies that we are developing our IP. And then we'll be scaling up, and these technologies then can be used in different verticals, not limited to AgChem.
Got it, sir. And just on the CapEx bit, how should we look at the Isagro capacity that you have? I mean, can you give us some sort of equivalence in terms of what kind of CapEx it would have translated into, or what kind of revenue potential, let's say, the plant can translate into, let's say, you had to build it organically by yourself? And when do you expect this plant to get fully utilized? I mean, I would assume that this plant would be utilized in the same way that any of your Jambusar or a Panoli plant would get utilized for CSM business. So if you could just throw light on like what is the future potential of this particular plant and till what time can this get commissioned and fully utilized?
Yeah, so we are working on this, as Subhash also explained earlier. We are working on aligning these capacities. So there is currently significant opportunity of, increasing the capacity utilization. That was one of the key drivers for us for this acquisition. So right now, we are aligning these capacities, available capacities with our, export products, and we'll be gradually fitting these products in available capacities, repurposing these capacities. So maybe in next financial year, next 6 to 9 months, we'll be able to kind of fully align these capacities with our demand pipeline and the, orders that we have, and we'll be, trying to maximize the capacity in next financial year.
Got it, sir. So basically, you're doing three, let's say this quarter, one plant comes, then another one next quarter, and then other one probably FY21 end. And despite that, you believe that this plant would equally be useful in doing a capacity expansion. Plus, you are looking at a QIP to further expand your capacities organically. So, if I understand correctly, you're seeing a very different shift in demand momentum versus what you've seen in, let's say, in the last 3 to 5 years. Is that a right understanding to have?
Yeah, partly yes. So there is certainly demand upsurge, no doubt about it. But we can't add this whole of QIP towards this. Yeah. So as I explained, QIP will have multiple.
So 3 parts, but it will at least one of the part would be organic expansion.
Yes. Okay, you're right.
Got it, sir.
Yeah, as we earlier said, our AgChem business continue to show promise, and we do see a growth continue for next couple of years. So that's what all this thing what we are doing is just to sustain the statement what we have made earlier.
Got it. And this QIP could it be in 2 parts, or is it like in one stretch you are looking to raise that entire 2,000 or 20 billion rupees?
We will. In fact, it's up to 2,000. We yet to take calls. Okay. What size, when. So let's wait for maybe the appropriate time.
Sure. Sir, just the last question. Nominee Gold and Ocean. So, like Nominee Gold has seen a meaningful price erosion in the last few years. When does Ocean get generic, and how do you expect, let's say, the domestic growth trajectory to pan out? Let's say if Ocean also goes to some bit of price erosion.
It's already generic, so I'm not very sure.
Okay.
When it goes generic, it's already a generic molecule. Ocean is already a generic molecule in the global scenario. So
no, I mean in India, let's say if 9-4s come in or dinutofuran effectively gets more entrants, when does that happen, or that has already happened? Pardon me, but I thought that I think you and probably another player are only there in dinutofuran in India as of now. So, is there a 9-4s coming into Ocean at any point in time soon, or that has already happened?
So let me answer that question. We don't expect anything to happen in the next. Of course, as all of you are aware, these are always under pressure. But we do believe that there is opportunities for continued growth by expanding into newer crops. And also, as newer molecules are coming in, we are also looking at how to reposition it through combinations and also through proper pricing strategies.
Yeah. And further, I think we hold this close to our chest. As you see, we have a past of managing nominee.
Yeah.
We will work the same.
Correct.
So we don't see that as a uphill task. And frankly, when will the next product, who will come, that's not in hand, that's the regulatory committees and the.
Sure.
To give it to them to take that call.
Sure, sure. Thanks so much, sir, and all the best. Thank you for taking my question.
Thank you. The next question is from the line of Deepak Kole from B&K Securities. Please go ahead.
Thank you, sir, for this opportunity, and congratulations for good set of number. So what is the order book proposition currently?
The order book currently at the same level, 1.4 billion.
Okay. And sir, recently there was a talk about pesticide management bill. So what is your view on that?
Sorry, come again.
Yes. The pesticide management bill is, it's only happened yesterday. So before we express a view, we would like to fully understand what has been given in, because that's something that's not very clear what has gone in. So it'll be too early to comment on that.
And it would also take some time before it has any impact on the industry, positive or negative, as following these, the rules will have to be enacted, and that's when the real impact will start. And we believe that's going to take a few quarters at least, if not more.
Okay. And sir, how the Aukira is doing in India? So are you also expanding it into different crops?
So Akira we have launched in wheat this rabi season, and our objective was to ensure that every user who uses it has a good experience, and we are able to follow.
Hello.
Okay. Thank you, sir. That is from my side. Thank you very much.
Thank you. Ladies and gentlemen, the line for the management has got disconnected. Please stay connected while we reconnect the management.
Got disconnected.
Ladies and gentlemen, thank you for patiently holding. We now have the line for the speaker reconnected. Over to you, sir. We'll move on to our next question. That is on the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Sir, this in 3 plants are going to commission, right? So in fourth quarter, we'll be commissioning one multi-purpose. So what would be the capex for that, and what would be the capex for Q1 and then Q3, if you can?
Can you please repeat your question?
Sir, I mean in a Q4, the multi-purpose plant which is going to come, that is one is in Q4 and one is in Q1, and probably one is going to come in Q3. So what would be the capex for these plants?
It's ranging anywhere between 175 to 200 crores kind of for each.
175 to 200 crores. Okay, sir. Thank you.
Thank you. The next question is on the line of Varship Shah from Emkay Global. Please go ahead.
Hi, sir. Thanks for the opportunity. First of all, congratulations for a great show. So I wanted to drill down a bit more on the QIP side. So I think there will be multiple, products under development in the R&D pipeline, and I'm sure the inorganic, the expansion in the non-agrochemical segments would be an outcome of our capabilities which have been developed in the R&D team. So just wanted to double check that. So the potential options which you're looking in non-agrochemical CSM. So do we have the technology already built in our R&D pipeline, or that will also be acquired with the acquisition itself?
Well, that would also be acquired with these, targets. So obviously there will be certain synergies and leveraging opportunities that we will see with our existing capabilities. But we would certainly look for some interesting technologies, interesting markets, customer segments, everything.
Right. And one more thing on the domestic business. So YOY, was there any, because our blended gross margins are same YOY, so in the domestic business, did the gross margins decline marginally YOY, or is it flat?
Have them separate.
Okay, I think that's it from my side. I'll get back in the queue.
Thank you. The next question is on the line of Rishabh Botra from Sharekhan. Please go ahead.
So just wanted to understand the growth prospect or expansion plan slightly better. We have Isagro plant as well. So the expansion or the plants which are coming up in Q4, Q1, Q2, and probably Q3, Q4, these are excluding the Isagro plant ramp up, or these are including that?
These are excluding. Isagro ramp up those are not new plant, those are refabrication, so that will continue. This new plant what we are talking is exclusive.
Okay. So these are fresh. And further expansion will be there post the QIP. We will announce further expansion plans.
We will see once we look at the strategy as we mentioned earlier.
Okay. So the demand buoyancy remains quite robust. Yeah. And hence we are doing such plans. So what would be the asset turnover from these new capacities which we are building in?
So in fact, we have earlier communicated and we maintained that the asset turnover what we are looking will be around 1.5.
Okay. At full capacity utilization, and will take around.
It's a gradual ramp up, but once they reach to that level, it will be 1.5.
So gradual ramp up, we can reach around 18 months or so, or it will take lesser time?
Yeah, it could be anywhere between 12 to 18 months.
12 to 18 months. And is there any margin differential what we are currently fetching and what these new plants will derive products in niche products?
No, we expect to maintain our existing margin profile.
Okay. Thanks, sir. Thanks a lot.
Thank you. The next question is from the line of Prateek Tolia from Elara Capital. Please go ahead.
Yeah, so thanks for the opportunity and congratulations on good set of numbers. So just clarification on QIP. You said that the enabling resolution gives you, you have taken this off for 2,000 crores, but you may or may not go for that. But does this also mean that you will have several tranches of QIPs that you will go for, or this will be just one QIP of a fixed amount and that will be about it?
No, there are multiple opportunities that we are evaluating, not one.
No, in terms of fundraising, that will be just one QIP through which you will raise the entire amount, or it will be you'll have a few more rounds of QIP?
Yeah, so this is what I said, that we are currently in the evaluation phase, and we will decide once all these options, targets, and timelines, everything is finalized.
Okay. And so this resolution, this enabling resolution that has been given, is that also has a deadline, as in it is valid for only 1 year, or it is extendable?
Well, this is generally for 1 year.
For 1 year.
Or 6 months.
Basically, we need to go to shareholders after this, so we will be going for shareholders approval of this resolution, and that approval, if I am right, is valid for 6 months.
Got it. Thanks a lot, and all the best.
Thank you. We'll move on to the next question. That is on the line of Sumant Kumar from Motilal Oswal Securities. Please go ahead.
Hi, sir. So, with the commercialization of 3 molecules in CSM, what is the total number of molecules we have as on date?
We have close to, I think, 21, 22 products.
Okay. And talking about the 24% growth in domestic market, can you bifurcate in the volume and value?
Sorry, Manik. Sorry, Sumant.
Yeah, domestic growth is 24%. So what is the volume growth in domestic market?
This is mainly coming from volume growth.
Okay. Thank you so much.
Thank you. The next question is on the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity and congrats. So, due to the unfortunate incident at Jambusar, will it have any impact on Q4 revenues and any orders from our innovator and partner company?
Your voice is not clear. Can you please repeat your question?
Yeah, so due to the Jambusar. Hello. Is it better now?
Yeah.
Yeah. So due to Jambusar unfortunate incident, will there be any impact on revenues in Q4? And will there be any impact on incremental orders from the innovators or so?
Yeah. So since this plant is currently shut and for needful repairs and necessary approvals and all, so there will certainly be impact on revenues of Q4 to the tune of, I think, 40 to 50 crore for Q4. But this has no impact as far as the orders are concerned. Mid to long term business, there is no impact.
Okay. And another question on the QIP. So you said part of those funds will be used for organic business growth. So do we have the necessary environmental approvals for the same if we were to deploy that money?
Yes, certainly. I mean, we have necessary environment approvals, both EC and GPCB approvals for basket of products that we currently doing and currently evaluating in R&D. So depending on how things progress, we will be able to invest in the certain products where we already have approvals.
Yeah, that's helpful. So just last clarification on the R&D activities. So if you could just give us a broad understanding of what is the team size, what are the areas we are looking at, and what is the pipeline for R&D?
Yeah, so currently we have more than 350 plus scientists that are working in R&D area, and mainly in R&D. So as I said, there are two broad categories. One is the CSM area where we are working with our customers on their technologies. This is basically a process research kind of area. And the other set of scientists are working on our own technologies, niche technologies, which we are developing both in chemistry area as well as in, process area, new technologies and new engineering technologies also that we are working on. So these are broad categories and the kind of resources that currently we are working.
Thank you so much, and best of luck, sir.
Thank you. The next question is from the line of Vihang Subramaniam from Samsung Asset Management. Please go ahead.
Yeah, hi. Thanks for taking my question, sir. So my question is mainly on the domestic business. I think last few quarters your commentary had been pretty muted because of the whole industry position as such. So just wanted to get a sense on the numbers that we're seeing this quarter. Is this a function of an underlying change in the whole industry, or do you think this is just some sort of a temporary relief and that the industry continues to still be in pain?
Well, industry is, I would say, in general, it still remains in difficult situation. Yes, this particular quarter, as explained earlier, is looking better because the overall Rabi scenario is positive. Kharif was not at all good, so there was also some impact of that, and because Rabi, because of water reservoir situation, acreages are looking better, so all that is looking positive, but there are some challenges on the produce side, the pricing side and all. So it's a mixed bag situation, to summarize it.
Okay, so basically you mean that going ahead, like the macro things like water levels and acreages are good, but you're still seeing stress in terms of like working capital and pricing pressure from competition, etc. Is that like the right understanding?
Yeah, that's right.
Sir, and just anything, this pesticide bill which was passed couple of days back, is there anything sort of which you think we should know about for our business, like any impact?
No, so we discussed, as we discussed with your earlier participant, that it was announced only yesterday. So we'll now, kind of study this, and a lot of rules, regulations are yet to be notified. So we will evaluate, and then we'll be in a position to assess what kind of impact it may have on, industry.
Right. So basically, like, given that we operate into more like patented and proprietary products, like, do you think there would be like some products which would be having like very high margin and some would be like, very low margins? Is that the case?
We don't talk specifically on product line, but we yet to understand what this bill will have an impact and how this will impact. It's too early to say what impact this will have on our portfolio. So let's wait for once we understand, I think we'll be in the right position to comment.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Madhav Marda from Fidelity Investment. Please go ahead.
Good afternoon, sir. Just one question from my side. Any potential capex or M&A that we are targeting? Is there a benchmark ROIC or benchmark IRR that we have in mind that we will consider before we deploy the capital?
In fact, our I'll say intent we always have some threshold, and when we evaluate things, we always evaluate those things based on those certain threshold. So we are definitely, whatever target we explore will go through those rigorous check and shortlisting. So I'll say definitely what those numbers are, we'll keep it at this point of time, not disclosed. But yes, we do have certain threshold, and we'll work on that.
And most of it, on top of it, one key objective always is that these investments should be EPS accretive for the organization. There should be arbitrage benefit to the company and its valuation.
Yeah, we do consider EPS accretive, ROC, ROE. These are the important factors which becomes part and parcel of all evaluations.
Okay. Just a follow-up. I don't know if it's too early to ask that, but will these any of the potential targets be immediately EPS accretive or over a period of time? How should we think about it? Because if we are entering into a niche new space, it could take some time to ramp up the business.
I think little too early to kind of get into this discussion, but yeah, I mean, we are sensitive to these evaluations.
Got it. Great, sir. Thank you so much.
Yeah.
Thank you. The next question is from the line of Swagat Kapadia from Asian Market Securities. Please go ahead.
Thank you for the opportunity. So your guidance of 20% growth over next 2 years, so that includes the ISAGro acquisition or excluding that acquisition?
No, that excludes ISAGro at this point of time.
Okay. And sir, if we look at your ISAGro acquisition, so you mentioned you are planning to reorganize the business. So any rationale behind separating the two part of the business?
Sorry?
The reorganization of ISAGro business. So what was the rationale behind doing the same?
The rationale is that we want to align the manufacturing piece of this business with our own capacities, manufacturing capacities, so that in our export business we can fully utilize them, integrate them with our product line and all. And that's the reason that this manufacturing piece will get merged with the PI, so that we can align that with our export business. The domestic, we have certain product portfolio and certain market segments where we currently focus, and ISAGRO's portfolio and the market segment where they are currently focusing is complementing, and therefore we would want to keep it separate from, so that we can focus on both these areas, and by merging it shouldn't get diluted, the focus in the areas that Isagro is currently focusing. So that's the reason that we would want to keep that separate from PI. So that's the rationale that we are keeping the distribution business separate, and we are eventually merging the manufacturing assets into PI.
Okay. And so last thing on the income tax part, so this quarter also we had about 29% tax rate, and in last call we mentioned that about 24% tax rate guidance for FY20. So where do we see the tax rate for FY20, and are we planning to shift to the new tax rate by next year?
For this year, we do expect our tax rate to be 25 to 26% effective tax rate. Next year, we will evaluate and see what is more beneficial for us, and we'll adopt as per that.
Okay. And so last thing, the new plants which are coming up, so are we going to take that 15% tax rate benefit on that plant? Is that possible for us, or it should be a completely new plant and new?
That's not possible for us. That has to be a separate independent entity, and everything should be completely independent. So that's not available for us.
Okay. Thank you, sir.
And our new plants are in SEZ, so they are in any case with the zero tax.
Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, kindly limit your questions to 2 per participant only. If time permits, you can come back in the question queue for a follow-up question. The next question is on the line of Deepak Chitroda from Phillip Capital. Please go ahead.
Thank you. So, sir, my question is basically any guidance for the next year in terms of the growth and basically in the domestic side, if I talk about, so what are basically we are planning for a product launches in India in a domestic side?
For next year, we'll wait for that's the right time when we'll come to next year.
Okay. And any in terms of the product launches ideas, I mean, probably any target for that?
We do have, in fact, a plan, and every year we are launching 2 to 3 new products. So we go with the similar numbers what we are doing in past also.
Okay. Thanks.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir, good afternoon. Sir, on this strategy of the company, especially coming from the QIP, sir, with the current run rate of almost 2,500 crore CSM business, I think that even without any leveraging, we are going to see another PI industry size company getting created in next 3 to 4 years with a 2,000 crore rupees investment, roughly 3,000 to 3,500 crore rupees revenues. We haven't seen this kind of aggression in the industry, specialty chemical industry. Self-sufficient was in cash flow generation and reinvesting in that. But in last 1 year, we have seen that multiple companies are coming with aggressive investment and even through QIP route also. Do you see, sir, even to understand that there may be opportunities, but do you see that are there risks involved in these businesses, large capex, overcapacities, also taking a bet on the China's and their strategy, and is there any risk involved in terms of over investment in this sector which may unfold in next 3 to 5 years?
Good. Thanks, Rohan, for asking this question. Very, very relevant question. But as you know, PI has been very conservative in planning, investing, targeting all our investments over last several years, and quarters. So that is the same approach that we have for today. Yes, there are opportunities, but we'll always remain very cautious in the areas that we are investing. And many of these areas, as I explained earlier, that rather than over investment in a particular area, we are now gradually diversifying, our bets on technologies and on verticals that we are currently working. That is one. Secondly, we have always maintained that we are investing in specialty areas and not the generic or volume or bulk area, where you can always have risk that if the market demand goes haywire, then yes, you end up with excessive investment and all. Whether Chinese situation tomorrow improves, what would be the impact on those bulk chemicals or generic chemicals, and also that is not the area that we are frankly investing or rather evaluating also. But we'll, in a nutshell, we'll always remain cautious before making any such investment.
So with this kind of investment, we see that over next 3 to 4 years, the company's top line potentially is doubling, and without any compromising on margins and ROC, right?
Yes, exactly.
Okay, great, sir. Thank you so much.
Thank you. The next question is on the line of Resham Jain from DSP Investment. Please go ahead.
Yeah, good afternoon, sir. So just one question. This QIP money which you are raising, just to clarify, are we on the acquisition side, are we thinking of acquiring anything from the global platform, in the sense outside India acquisition kind of thing?
Yeah, so we'll be open to look at those opportunities as well. So all this is not India-centric, but we are looking at opportunities, options which are in India and outside India. And we are open to look at that as well.
Okay, thank you. That's it.
Thank you. The next question is on the line of Prashant Biyani from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity. So with Isagro now coming in, do you expect Q4 and FY21 margins to take some kind of hit because this is a low margin business, or we can absorb the cost pressure?
We will, in fact, our intent is to maintain margin profile, but we'll work out what overall number look like, and maybe when we come for guidance for next year, we'll be able to share with you better perspective.
Okay. And regarding the potential acquisition that we may be zeroing in on, are these referral from the client side, or this we have been pursuing on our own? If some indication can be given.
No, we are pursuing on our own. There is no referral that we are currently working.
Okay, thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, gentlemen, for your participation and continued interest in PI's growth story. We will expect your, continued interest and support. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of PI Industries, that concludes today's conference. Thank you for joining us, and you may now disconnect your lines. Thank you.